friends, we all know that in class 12 we study the various tools of analysis. We learn something about the comparative statements, common size statements, ratios, and then cash flow. All these tools are very important from the analysis point of view. I have tried to make you learn something about cash flow statements, its theory, the terminologies used, as well as the format of cash flow statement. Let us start and learn something about the basic things about cash flow statement. I have divided this chapter into two parts. In the first part, we are going to learn something about the basics of cash flow statement and then some important concepts in part 2. Let us see the meaning of cash flow statement. Cash flow refers to inflows and outflows of cash, that is, movement of cash and cash equivalents. The transactions which result in an increase in cash and cash equivalent are inflows of cash, while the transactions resulting in decrease in cash and cash equivalent are termed as outflows of cash. The transactions of cash flow statements are classified into three activities, namely cash flow from operating activity, cash flow from investing activities, and cash flow from financing activities. The Institute of Chartered Accountants of India (ICAI) issued Accounting Standard 3 AS3 revised for preparation of cash flow statement. With the introduction of Companies Act 2013, preparation of cash flow statement is mandatory for every type of companies except one-person company, wide section 240. Objectives of cash flow statement. The basic objectives of preparing a cash flow statement are: number 1, to ascertain the various sources of activities from which cash and cash equivalent have been generated during the specified period. We are talking about the various sources over here. Sources of raising the funds. It may be the owned funds, it may be the borrowed funds, maybe in the form of the share capital and the debentures or anything else. So to ascertain the various sources of activities from which cash and cash equivalent have been generated. Second, to ascertain the various uses of activities in which cash and cash equivalents have been used by the enterprise during the specified period. Various uses. One needs to know the funds that we have generated. How are they used? Or we come to know the various uses of activities in which cash and cash equivalents has been used. To ascertain the ultimate net change in cash and cash equivalents during the specified period, and to ascertain the changes in the components of cash flow statement. So these are the three objectives of preparing cash flow statement. Let us know something about the various terms that we use in cash flow statement. First is cash. What is included in cash? It includes cash in hand and demand deposits with banks. Next, cash equivalents. This is really very important term. Normally in cash flow, we use it as one term, cash and cash equivalents. But we have seen like what is included in cash, and now let us see what is there in cash equivalents. Short-term highly liquid investments which are readily convertible into known amount of cash having insignificant risk are called cash equivalents. Investments having maturity period of 3 months or less from the date of acquisition are termed as cash equivalents. Highly liquid investments which are readily convertible into known amount of cash. Investment in such marketable securities, we call it as cash equivalents. You have to take care of the maturity period of 3 months or less. Any investment having maturity period of 3 months or less from the date of acquisition are termed as cash equivalents. Let us see the various examples. Treasury bills, commercial papers are the best examples of cash equivalents. Even preference shares of a company purchased shortly before the date of redemption can also be treated as cash equivalents, provided that there is no risk failure of payment by the company. Right? Any purchase of preference shares just before the date of redemption can also be a part of cash equivalents. Next, cash equivalents includes short-term deposits or short-term investments, marketable securities or treasury bills, As per syllabus contents, current investments are to be taken as marketable securities unless otherwise specified. Current investments. By default, we are going to take it as marketable securities and will be a part of cash and cash equivalents. Now, what do you mean by unless otherwise specified? This simply says that if in the question you have some information out of the total current investments, some amount is non-marketable. In that case, that non-marketable current investments will be treated as current asset. So please take care. Current investments are to be taken as marketable and will be a part of cash and cash equivalents. What is cash flow? We already have seen that in the basic meaning of cash flow statement, the inflow and outflow of cash. It refers to inflows and outflows of cash and cash equivalents. AS3 revised requires that cash flow statement be prepared in a manner that it reveals inflows and outflows of cash and cash equivalents from operating activities, investing activities, and financing activities. This is what we have already gone through. So we prepare this statement to know the inflows and outflows of cash and cash equivalents from these three activities. It is pertinent to note that movements in the components of cash and cash equivalents are the part of cash management of the business entity rather than the part of its operating, investing, and financial activity. We already have gone through the components of cash and cash equivalents that will be a part of the cash management of the business entity. That is not to be considered as a part of operating, investing, or financing activity. Let us see the examples of that. The examples of movements of cash and cash equivalents are cash deposit into bank. So cash balance and bank balance will be getting affected. So both are the part of the cash and cash equivalents. So this will never be a part of any of the three activities, that is operating, investing, and financing activity. Next example is cash withdrawn from bank for the business. Next, purchase and sale of short-term marketable securities. This example is very important. Students, do remember the first and the second. Third one is really important. Normally, these type of questions are asked in 1-mark questions. Purchase and sale of short-term marketable securities is a part of cash and cash equivalents. Cash flow from operating activities. The operating activities refer to principal revenue producing activities of an enterprise, and all those activities which are neither investing nor financing activities. They include all those which are helpful in ascertaining the net profit or net loss of an enterprise. Cash flow from investing activities. Investing activities of an enterprise refers to purchase and sale of fixed assets and investments which are not held for resale purposes. It also includes current investments which are not held for resale purposes. It also includes current investments other than marketable securities, because any marketable security will be a part of cash and cash equivalent. So other than marketable securities will be a part of investing activities. Cash flow from financing activities. Let us see. All those activities of an enterprise which results in the change of capital and borrowing are referred to as financial activities. This is where we have already gone through the objectives. The sources of funds will be in financing activities. The uses of funds will be a part of the investing activity. Note for financial institutions. For financial institutions like banks, finance companies, mutual funds, etc., transactions related to purchase and sale of securities will be considered as operating activities, as it is a part of their operating activity, a routine activity, operating activities. Cash paid for interest and cash received for interest and dividend will also be operating activity of a financial enterprise. Very important examples taking into consideration the 1-mark questions. Treatment of special items as per AS3 revised. Let us go through one by one. Interest and dividend received. We know it is a receipt for us. Let us see how are we going to deal with this in cash flow statement. It is treated as cash inflow. As I told you, it's a receipt, so it's cash inflow from investing activity, because you're going to receive interest when you have invested in debentures or any other securities. You will be receiving dividend if you are invested in shares. So any receipt of interest and dividend is going to be a part of investing activity. Interest, dividend and interim dividend paid. It is paid, just the opposite of received. Interest we have to pay on debentures, short-term borrowing or long-term borrowing, we need to pay interest. Dividend and interim dividend. Dividend we pay generally at the end of the year. Interim dividend a company pays during the year. So these are the amounts that a company pays because of the sources of funds. Company issues shares, they need to pay dividend on the condition like they have profits. If the company has some borrowed funds with them, they need to pay interest. So let us see how it is treated in cash flow statement. It is treated as cash outflow from financing activities. Taxes paid. Let us see this. It is treated as cash outflow from operating activity as it is paid on operating income of the company, right? Dividend tax. Now we all know that dividend that is paid by the company is a part of financing activity because the company issues shares, company earns some profits and that profit is divided amongst its shareholder, so that is dividend paid. Dividend paid is a tax-free income from the investor's point of view. So basically the tax is paid by the company on that dividend. Let us see how it is dealt in cash flow statement. Tax paid on dividend should also be classified as financing activity along with dividend paid, right? Capital gain tax. Capital gain is because of the sale of the assets, because of the sale of the investments at profit. So that is a capital gain. So we need to pay tax on that. And because we are talking about some assets and investments, so it has to be a part of investing activity. If capital gain tax is paid on profit from sale of fixed assets, it is classified under investing activity. Next, extraordinary incomes. It is also possible for a company to receive some extraordinary incomes. Let us see such incomes. Insurance claim received for loss of stock is one of the extraordinary item which we will face in cash flow statement. Insurance claim received for loss of stock has to be categorized under operating activity. Second, insurance claim received for destruction of fixed assets. Suppose any of your fixed asset, plant and machinery has been destroyed by fire and you have received some insurance claim on that. So again, when we talk about the fixed assets, it has to go by default in investing activity. Let us see which are the amounts shown under the various activities. Inflow of cash, outflow of cash under the various activities, that is operating, investing and financing. It is very important to know that when you talk about the operating activity, we need to be sure that whether it is a non-financial company or a financial company. Let us first discuss about the inflow and outflow of cash for non-financial companies. Let us see the inflows first. Cash sales. It's a routine activity. The cash received for sale of goods. Cash received from debtors and bills receivable. Cash received from royalty, fees and commission. Insurance claim received for loss of stock. These are the various inflows for a non-financial company of operating activity. Let us focus on the outflows. Cash purchases, cash paid to creditors and bills payable, payment of operating expenses like wages, salary, rent, etc. Taxes paid unless identified with investing or financing. We just have discussed in the previous slides. If we have capital gain tax, that will be investing activity. If we have dividend tax, that is financing activity. But if we have paid some tax on the operating income, so that is an outflow of cash of operating activity. After going through the inflows and outflows for non-financial companies, now let us go through the inflows and outflows. First, cash inflows. Interest and dividend received will be the operating activity for financial companies. Sale of securities, loan and advances repaid by third parties. For cash outflows, interest paid in cash, purchases of securities, loans and advances to third parties. These are all the inflows and outflows for financial companies. These are to be taken care of from the viewpoint of 1 mark questions in board exam also. Under investing activity, again we are going to go through the various inflows and outflows of cash. Let us start with the inflows. When you talk about the investing activity, we know like it is going to be the purchase and sale of fixed assets and investments. When you talk about inflows, it will be basically the sale of the assets, sale of the investments, and the incomes that we receive because of such investments. Let us go through. First one is sale of fixed assets. It's a receipt. It's inflow of cash under investing activity. Sale of investments, non-current and current also, but other than marketable securities. Interest, dividend and rent received. As I told you, because of the investments made by us, it is obvious that we are going to get some return, and that return may be in the form of interest, dividend or rent. So this is also the receipt for us. So inflow under investing activity. Insurance claim received for destruction of fixed assets. Again a receipt. Fixed assets we are talking about, so it has to be investing activity. Repayment of loans and advances received. It is possible that as a company we have advanced a loan, so when you just have received it back, so it is going to be inflow under investing activity. Now outflows. Purchase of fixed assets, whether it is tangible or intangible. One has to take care over here intangible asset. If intangible asset increases, that shows the purchase of fixed asset, purchase of intangible asset. But if it decreases, we will call it as the amortization of intangible asset. Purchase of investments, non-current and current other than marketable securities. Payment of capital gain tax, we have already discussed, and loans and advances to third parties. Next is financing activity. Let us see the inflows and outflows under financing activities. Cash inflows. Again, just to remind you that under financing activity we are going to talk about the sources of funds. Inflow will be the issue of the securities, maybe in the form of the shares, equity shares, preference shares, debentures. And when you talk about the payments, it will be talking about the redemption of the preference shares, redemption of debentures or any expenses related to that. Let us go through the items one by one. Issue of shares for cash, because we all know that the shares can be issued for cash as well as for consideration other than cash. So no place for shares issued for consideration other than cash in cash flow statement. We have to restrict ourselves for the issue of shares for cash only in cash flow statement. Issue of debentures for cash, the same thing. Issue of bonds. Proceeds from long-term or short-term borrowings. Whenever you borrow the funds, maybe a long-term or a short-term. Long-term maybe in the form of the debentures, bonds, or maybe some bank loan. Short-term maybe bank overdraft, cash credit. So any such proceeds are going to be inflow under financing activity. Let us see the outflows now. Payment of loans. Yes, loans are to be paid back, so it is going to be outflow. Redemption of preference shares, buyback of equity shares, redemption of debentures for cash, decrease in balance of bank overdraft or cash credit, payment of interest and dividend. When you talk about the payment of interest over here, so interest can be on short-term or long-term borrowings. Payment of dividend tax also we have already discussed earlier. So these are the various inflows and outflows under financing activities. Financing activities will not include the following as these do not involve cash. First one, issue of bonus shares. Whenever the shares are issued as a bonus, so we all know that reserves are utilized. So no cash is received for issue of bonus shares. So that's where this will not be included, or this will not be a part of the financing activity. Conversion of debentures into shares. Again, you are converting debentures into shares, so no movement of cash. When there is no movement of cash, not to be included in cash flow statement. Issue of shares or debentures against the purchase of fixed assets. This is also one of the important topic in the chapter share capital and debentures. The shares are issued, the debentures are issued against the purchase of fixed assets. So again, no movement of cash, so not to be a part of cash flow statement. Thank you so much. Do not forget to like, share and subscribe my channel. God bless you all.